This is Greg for Teslafaninsight. We wanted to provide a little insight into what actually happened to the stock price of Tesla today. So, as you know, there's a lot of variables that move the stock market. So, first of all, we wanted to thank you for joining us and also specifically thank our Patreon supporters. A number of folks have been emailing us asking what exactly happened, and we'd like to share our estimate of what occurred. So basically, one of the challenges that pops up with stocks is if you think about it, 60% of any stock is owned by large institutions. Tesla's kind of interesting because not only do you have the 60% institutional holdings, but you also have 20% owned by Elon, so that's 80% of the stock. So I actually had a meeting one time with one of the heads of KKR, Kohlberg Kravis, which is a large investment fund. And what he pointed out to me was, he said, one of the things a lot of people don't realize is on an annual basis, only 10% of homes change hands. So as a result, what actually is happening is that the value that's assigned to those 10% of the homes, in essence, defines the value of all the other homes that are not sold. So I wanted to point that out in this case with what happened with the stock today, because as you know, we had a situation where the district attorney of the state of California actually made a comment that if need be, he would enter to enforce state law. Now, this is a very interesting move on his part because there's all the discussions of the challenges between Elon and the county, etc. What was strange was that he made that comment even though there's already been a lawsuit against the county that's in federal court that Elon filed or Tesla filed. Now, what this means then is that if the DA is going to respond, he's actually going to have to go through the courts and assist the county of Alameda in actually dealing with it as a court case in terms of how the law would be managed, because it's now a federal case. So what's interesting about this, or a challenge about this, is when he entered the fray, that spooked the markets, because all of a sudden there's a question mark, is there a new challenge for Tesla in its process of being viable that's generated by the state of California in the form of the DA? So there's a rule that goes on here, and it's kind of called the bot rule. And then following on the bot rule is a concept called stop loss rule. So these two elements can come together in interesting, strange ways. Typically, stop losses occur at the zeros, 800, 700, 600, etc., or at the 50s is the other number, 750, 850, for example. So what can happen is if you can come up with a process where there's some negative news and that's been registered, the job of the bots is to sell quickly. What can happen then is once they sell, if you're near in essence, it's a cliff in the form of 800, for example, you can see not only the bots sell off, but you can also see sell-off occurring from those that have stop losses as well. So this is sort of a double whammy of sales that can occur. And a lot of sort of rich and smart hedge funds use this as a vehicle to minimize losses when we have heavy downturns in stock price, etc. Now, one could argue that there's a triple whammy here, because not only did you have the DA step in, the bots step in to sell, but you also had this problem of the markets crashing by 400 or 500 points off of comments made by the head of the Fed. So I believe what happened today is a triple whammy on Tesla, where you had three different entities, or three different type of entities. I guess that'd be four. So that would be the Fed making the comments that dropped the market down, the DA of California making negative comments about the Tesla situation, causing the stock price to fall, which triggered the bots to sell. And finally, we have the fact that the stop loss folks are exiting the stock quickly as well. So you can have a relatively small float of the stock, which is probably 10, 15% of what's out there, determine the value of all the other shares. So I think it's unfortunate how the trading day went down. And if you think about it, this is not unlike what happened last week in terms of Mr. Einhorn making comments. And then after Mr. Einhorn makes his comments, Elon Musk makes a somewhat negative comment. And so there was another case where you had the bots take over, sell off, and then Elon has fuel to the fire and the stock price falls further. So this seems to be one of the phenomenons about what tends to happen to Tesla. Is it good? No. I do think, though, that, I was sharing with some of our folks that watch us on Patreon that we're in a period right now where there are a lot of large hedge funds who end up going out of business if Tesla hits $9 a share. So it wouldn't be not a shock, therefore, to be extremely cautious into what you're doing, because there's a good chance that folks may tank stocks as a way to, reduce the potential for Tesla to do extremely well. The other problem that's sort of lurking with this whole thing is the 3-day rule on the fact that the factory is reopening. We just got full confirmation of when it's going to open and that it's going to open. So the next step is the analysts really have to go through and revise their estimates relative to this new production. How much of it is it being done, and therefore how does it affect their forecast of earnings, and how should the large holders react to this? So I kind of bring this up because we're expecting these large buyers to step in and show themselves, but again, they typically don't do it until the third day. For some reason, I had a sort of a strange encounter. I was working at Forbes magazine when I was in college, and one of our top writers at Forbes was kind of an investment expert. And, it's been 30 years since I saw it, but his desk had probably almost a foot-high stack of analyst reports on it. And what would happen is that a bunch of analysts on the street would send reports on whatever they were researching, and he had a habit of trying to read as many of those as possible in order to glean information that he could use to be a better reporter. The key to it, though, is that I kind of bring that up because it wouldn't be a shock for 5 or 10 analyst reports to drive the thought process of how the large institutional funds move their money. So the 3-day rule is really in effect because it takes time for them to go through all that data, identify whether there's information from one and not the other that might be impactful on the decision that they make. And so it does take time for them to fully digest and respond to what occurs, hence the 3-day rule. So if there's a reaction instantly, it tends to be among those who represent the smallest holdings in the market, and they typically can react quickly when it comes to selling or buying. But the challenge is for the large institutions, they can't move that fast. And so they end up having to do research prior to their move. And this is why we often discuss the 3-day rule. And I'm kind of bringing it up here again. So clearly, there are a lot of people I've noticed that knew about the 3-day rule. I would have to say I'm very surprised at the number of people that sent me notes about what happened, because anything that happens within the same day, within a couple of hours, is typically the hedge funds and the bots reacting. And if you're in the unlucky position to be at or near the zeros, the hit can be a lot harder because you're also triggering a number of people who are, not necessarily bots, just individuals that might have asked their brokers, if in fact you see a downturn, I want to be sold out at a given number. And so this is why you can see the underpinnings under certain stocks drop suddenly. And it does take time because those managers, for example, if they've decided that the bot sold prematurely, they can go back in and buy perhaps at lower or better prices than they would have otherwise. But the disaster is done. And in this case, you also run into something I call earnings compression. So anytime there's a heavy downturn in the market, the first stocks that are sold are typically those with the highest PE, because in theory, their growth should be impacted by the dropping stock market and sort of reduced possibility for consumers within that stock market. So, long-winded statement to say, um, this is kind of a triple or quadruple whammy that hit Tesla today. And I don't think it makes a whole bunch of sense given that they're opening back up to produce in Fremont. They can fill up on some of those thin vehicles that have sold out already and, get back into the winning column pretty quickly. So I agree with the question that was posed, what happened and why. I think if you take a look or listen at some of the data I just shared, it'll explain the whole thing better. We look forward to your comments. This is Greg for Teslafaninsight. Thanks for joining us once again. And bots are very powerful, and so are folks who are trying to prevent more losses by using stop losses, because they can work together with a down market to really tank a number of stocks. Have a great day. Bye for now. Don't forget your 25 leg lifts. Also, no more than once a week fried foods. I had my share today with a Popeye stop for the first time in a month. Any rate, thanks for joining us. Tschüss, German, au revoir, French, Lehithro, Hebrew, hey do, Swedish, Zdravstvuyte, hello in Russian, ni hao ma, hello in Chinese, do widzenia, goodbye in Polish. And in Jamaica, we say enough respect, walk good man. Thanks for joining us. We look forward to your comments. Have a great day, and bye for now.